The Nifty is now up almost 85 odd points, up about half odd percent.
80 points on the Nifty, and the gains are really driven by the mid-cap space.
A nice long weekend. The markets, well, we started with a gain of around 100 points odd, and with around 60 minutes to go, you're still holding with those gains. I think the heartening fact today is the mid-cap index outperformance, sitting with a gain.
Markets are virtually close to the high point of the day. A solid 130-point rally to begin the week with on the Nifty, with the Sensex gaining 380 points, the mid-caps outperforming. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 key headlines. I'm Reema Tendulkar, and these are the headlines for the day. Stock markets gained for the 6th straight day. Sensex and the Nifty end at 4-month highs. Shares on BSE have added more than 11 lakh crore by way of market capitalization since the start of August. A fresh bid from Mahindra for leadership in electric vehicles unveils plans to launch 5 electric SUVs by the end of 2024. Signs a pact with Volkswagen for EV parts. Anand Mahindra tells CNBC-TV18, we cannot hedge our bets, we have to go all in. KKR sells a 27% stake in Max Healthcare for over 9,000 crore rupees. Foreign investors like Government of Singapore Capital Group buy shares from KKR along with others. Max Healthcare Managing Director Abhay Soy says there will be no change in business strategy. UTI AMC jumps and Tata Mutual Fund likely eyeing a stake. HDFC AMC also soars after we learned from sources that Standard Life sold stake in the company via a block deal. Muthoot Finance takes a nosedive after loan growth dips, margins contract. DFM Foods gains on plans to delist from the exchanges, while Apollo Tyres ends higher despite a mixed bag in Q1. And here's the lineup of what we have for you in store on our show. In Market Opinion, we have Rahul Chadha of Mirae Asset Global Investments and Dan Feynman of Credit Suisse. And the big voices on the show are HDFC Chairman Deepak Parekh, Anish Shah of Mahindra Group and Abhay Soy of Max Healthcare. All right, first up, the markets bulls remain in cruise control. The Sensex and the Nifty end with gains for the 6th straight day. In the last 6 days, shares in BSE have added a market capitalization of over 6 lakh crore rupees. In fact, since the start of August, more than 11 lakh crore rupees have been added to the market cap. Mid-caps managed to outperform the blue chips today. Sonia is here with the market action.
Well, thanks a lot for that. It was a very strong day for the markets today. The Nifty rose for the 6th straight day, clocking in a 4-month high. The Nifty reclaimed that 17,800 mark and is now less than 5% away from the 52-week high. In fact, the Sensex had a very strong run as well, almost 380 points in the green. The sector that led the way from the front was autos today. You had a demand uptake, new launches that got all the auto stocks very active. The Nifty Auto Index itself was up over 2%, while stocks like Eicher Motors, M&M, Bajaj Auto hit fresh 52-week highs today, and stocks like Maruti and Escorts rose about 3 to 9%. The other space that did quite well is insurance companies, where stocks like HDFC Life, SBI Life rallied quite a bit. You had HDFC AMC that surged 11% after a block deal of 6% equity. And among the top Nifty gainers today was also Adani Ports, where the stock went up 4% post its Q1 earnings. All in all, the bulls continue to be in absolute control of this market. The FIs have now bought almost 18,000 crores in the cash market.
Sonia, thank you very much for that. In Market Opinion, Rahul Chadha, the Chief Investment Officer at Mirae Asset Global Investments, said that he was cautious in the Indian markets for now. On metals, he expects to see a 20 to 30% downside if growth slows down. Listen in.
Our expectations from here would be still cautious. Look, what happens is the monetary policy works with a lag. So we'll see impact of Fed's tightening cycle come through in coming quarters. Fed is going to hike even from here, 50 bips again in September, and the subsequent policies is easily expected. Balance sheet contractions starts now. In India also, we've seen RBI raise rates in recent past. So things are going to be slow from here. So I would not be in a hurry to buy. I think there would be good pullbacks, which would be good entry points to add. I think metals, clearly, if the growth slows down, the names can see another 20-30% downside. But one would be looking to buy, again, leading companies like Hindalco, Tata Steel over there. The balance sheets have significantly improved. They kind of are well integrated in terms of the raw materials, etc. Incremental supply additions are very limited. So I think these are the names one would look to buy, but you look to buy them 20-30% lower at 0.5, 0.7 times price to book.
In more opinion, Dan Feynman, co-head of equity strategy Asia Pacific at Credit Suisse, said that Indian markets needs more positive catalyst to rally from here on. He added that the recent buying spree by the FIs does not mean they're turning incrementally more bullish in India relative to the other markets. Listen in.
Bit harder for India to continue running unless we get more positive catalysts. The problem right now is, number one, valuations. India was already quite expensive relative to peers before this recent rally began, and now it's even more expensive. Secondly, the EPS momentum is actually starting to ease a bit. India's been seeing strong upgrades over most of the past year, but that's starting to slow right now. So what we need to move forward would be more falls in oil prices and further easing of the pressure on interest rates and inflation. Foreign investors, foreign institutions have been buying equities in general. It's not just India where people have been buying. They've been buying in other markets in Asia, other emerging market regions, and they've been buying in developed markets as well. So I wouldn't say that the fact that you're seeing net buying in India means that they are turning more positive on India relative to other places globally.
Okay, let's get you the second headline now. The Mahindra Group has stepped up its electric vehicle plans. The company has announced its plans to launch 5 electric SUVs by the end of 2024 and struck a deal with Volkswagen for EV parts. CNBC-TV18's Parikshit Luthra reports from Oxfordshire in United Kingdom, where the Mahindra Group made the big announcements.
The electric vehicle passenger car market is heating up in India. Tata Motors has the pole position, and the Mahindra Group is now laying out aggressive plans to win the EV market. Here in Oxfordshire, at the company's Advanced Design Studio, Mahindra unveiled 5 new electric vehicles to be launched between 2024 and 2026. The first of the lot, the XUV E8, will be launched by December 2024. They also elaborated on a close partnership with Volkswagen. Let's listen in to Mahindra Group Chairman Anand Mahindra.
You know, today I'm going to be a man of few words because it's all about the heart today, it's not about the mind. You saw that we have created a genre of design called hardcore design. So I'm speaking from the heart. I want to thank the team here, Rajesh, Velu, Pratap, Vijay, who unfortunately couldn't be here, but I want to thank all of them from the bottom of my heart. What they've done on our 75th anniversary is making me so proud. There's a flag fluttering in here, gracefully in the breeze.
And how would you compare this moment to the launch of the Scorpio?
You know,
and what does this mean for the company now?
Mahindra has always been in the business of taking people. We're a small company relative to the larger company. So we cannot hedge our bets. We have to go all in and out. So what you've seen is actually kind of warp into a new galaxy. We're moving at warp speed, we're going to enter a new galaxy.
With us right now is the Managing Director of the Mahindra Group, Anish Shah. Mr. Shah, thank you very much for joining us. 5 new cars. What does this mean for Mahindra's automobile journey? Is the future all electric? Are all future investments going into EVs only?
So the first step in our journey, Parikshit, is ensuring that we have leadership in EV. We've been talking about that for some time. We've said, wait for August 15th, we will do the reveal. And here we have 5 new SUVs. If you just take a look at the range, these are very exciting vehicles. And I'm sure that there's going to be a lot for our consumers, for everything they want in SUVs. In terms of where we go forward from here, I think a lot will depend on how infrastructure builds out in India. I have no doubt that consumers will prefer these cars, even though we've got some really nice cars on the ICE side. But as infrastructure builds up, we'll see a greater inflection point for EVs taking off. So the next 3 or 4 years, we'll decide whether we go faster on electric or we do a combination of both.
In more corporate news, KKR has sold its entire 27% stake in hospital chain Max Healthcare for over 9,000 crore rupees through block deals, which took place early in the morning. Foreign investors like Government of Singapore, the Capital Group have purchased shares from KKR along with others. Following this, the co-promoter's exit, Max Healthcare's managing director Abhay Soy said there will be no change in the business strategy. The stock ended with a gain of 10%.
This is the largest sell down by a private equity fund in a secondary market, both in value and in percentage volume, as well as the fastest ever within 2 years of listing. So, it's a huge endorsement for not only the company that we manage, but more importantly, the resilience and the depth of the Indian capital markets, because, to do a sell down of 9,200, which is crores, and for it to be absorbed overnight by the capital markets, it's a huge sort of endorsement for our resilience. We enjoy the credibility of being very high on governance, and the markets reward us for that as well by the higher multiples that we achieve. So we intend to sort of continue walking down that track. So it doesn't change our strategy at all. For now, we're just happy to have attracted, very, very good investors in the form of the Government of Singapore through GIC, Capital Group, which is a $3 trillion group, and, the best of marquee investors through the sell down. Well, as a part of our shareholders agreement, they will be stepping down from the board seats, and we will be nominating other non-independent, non-executive members as whole-time directors. These need to be non-independent because you need 1/3 to retire, in rotation. So you need at least 3 of them. So I think, KKR has not been involved in the management part of it, because I think from the very beginning, they've been clear that if they could manage better, then, that would be, contrary to what the LPs think. They partner with promoters and with people they believe who they can depend on to deliver that, which they've done. So they've been very supportive.
Time for a short break, but stay tuned. Don't go anywhere. We'll be back in a jiffy with the other headlines.